Alrighty, happy Thanksgiving week. Today is Tuesday, the 21st of November, and welcome to the Hurley Financial Services Commentary. To let some of you know, our numbers are probably going to start to increase in the very near future. And plain and simple, I'm going to be working with an advisory to help the advisory get trades placed. I'm going to offer this to some people along with an advisory type of, just going over what their trades are. And with that said, I will most likely have this with some more people to be attending. So we'll probably get some increase in numbers for some people that are going to need help with the market. And yes, David, I'm still going to have all you guys registered at the end of the year. And what I'm probably going to do is I'm probably going to go a quarterly registration. So I'll just do the registration myself, and we'll have a quarterly registration. So it's going to rotate how to log in every so often. With that said, today I want to talk a little bit about the what ifs. And this was brought to my attention last week. Kevin, you said one thing at night and you do something different in the morning, or in this case, I didn't do anything at all. So let me ask the three of you that are now here, why would I do that? Why would I say something at night and do something different the next morning? Why would I do that? Markets change overnight. Different things happen overnight. There you guys go. Good answer. Both of you said almost the same thing. Yes, of course, right? I'm going to go ahead and I'm going to say markets change. My keyboard. Why is my keyboard not working? I think my keyboard would work in some way, shape, or form. Unless it's a read-only document. So let's try saving it again. And let's see. That's not working, so give me a quick second. Sorry, guys. Web layout so you guys can see it. There we go. Markets change overnight. But another question comes up. What am I trading? How am I doing this? What is the big difference here? That makes, well, actually, let me state that another way. I'm going to say market change right even with a rules-based investment strategy. So, right, for some people that are trading, that are doing spreads, it's a 20% return on investment, and out they go. Some people, it's 100% investment. And no matter what they do, and out they go. And I should say 100% trade / investment. And for some people, it's make as much as you can until the money is needed. Where does collar trading fall into this? Where does collar trading fall into this? Number 3. David, does number 3 mean it makes as much as you can until the money is needed? Yes, of course. There you go. In fact, in all honesty, what you do and when you get out is different when you invest and when you trade. There's a huge difference. Investing is for a longer period of time. Investing is to add shares. Investing is to get bigger dividend payments, more shares to do covered calls against. Investing is not a 20% an out. It's not a 50% now. It's not 100% now. Investing is not trading. They are significantly different. So for those of you or some of you that have talked about, hey, you said you're going to do one thing, the next day you didn't do it. Well, yeah, something changed. Something happened. I want to make more money on my Costco long calls. Hey, it traded above its support level, then it came down in a day. Hey, NVIDIA ran off, and all of a sudden we were $10 in the money on a covered call. Next thing I know, we're $100 in the money. Things change. Well, Kevin, we could have made so much more on NVIDIA. Yes, you're true. That's correct. But you're going to walk away with a 500% return over 5 years. That's an average of 100% return for the time your money was in NVIDIA. If you don't like that, then what I'm doing is not going to be a good fit for you. Could you have made 1,000%? Yeah, you could have. But it's kind of funny because I talked with a couple of my guys, my investment advisors, and what we keep coming up against is, you know what? People are okay with taking all the risk for all the reward after the stocks move that way. You know, moved really bullish or made a big jump higher. Everyone that we talk to is never comfortable with all the risk for all the reward when it goes down. And that's where, you know, your advisor comes in. That's where your advisor manages it, and for crying out loud, take it easy on us. Relax a little bit. You're making some good returns, and you're doing it with little risk. If you want all the risk for all the reward, you can do it yourself. That's okay. You're more than welcome to do it yourself. If you want someone to be looking at your account every morning, looking at your positions every morning, deciding on what we feel is going to be in your best interest, knowing we're in those same positions, for crying out loud, let us do it. We want to do it. We want to be there to help you out. We're not doing bad this year. A $1,275,000 gain on 6.8, and really that's more like on a 5.3. Not a bad return. Now, some of you might say, well, you're doing better than others, for some than others, and that's correct. We've got some that have more shares of Baidu that have been in it for years. We've got some people who have more shares of Apple, been in it for years. Some have had more shares of Disney, been in it for years. Visa, been in it for years. So yes, I mean, things are changing and different, but I wanted to show this to you today because, in all honesty, I'm running Apple for all intents and purposes with protective puts that are going to expire on Friday on our half day. Don't forget, no market. That's correct, David. Market's not open on Thursday. I have just a covered call, longer-term covered call on Outdoor Brands. And it's a December 15th, so we're probably going to take all that credit in pretty quickly here. Bank of America shares. I've just got some shares running now. Baidu, I just have some shares running now. Citigroup, just have some shares running. Clorox can't get above that 135, so we have a longer-term covered call. We're probably going to take, obviously, all of that credit in time. I guess we will see, but we're going to be right on the border there. Cost base is a 140, so see if Clorox bounces down. Costco, quite a few long calls. We've made a great return. I'm probably looking, because we had some better returns earlier, I'm probably looking at setting like a $22 exit. Or if we get up to the $22 of profit, it'll set a trigger and order, so that way our other covered call is 100% risk-free. It's completely paid for by profits of a booked covered call, a booked long call, excuse me. DHI. Kevin, why didn't you add covered calls on this? It kept going. Home prices looked good. All the home data, as I took a look on it on briefing.com, looked good. I just was protecting, in all honesty, just protected our profit at that point. But Kevin, you said you're going to add your covered calls, and I was, but I didn't get the credit. I didn't get the credit that I wanted to, and thank goodness I didn't, because I was going to put them at 48. We got a put spread against our long calls, and kind of interesting, you know, we're going to pay $1 for a significant movement up. Our cost basis is way down here at 29, so we're looking at a great return on D.H. Horton. Disney, just holding on to some shares. Off we go. Ford is just shares. Facebook is long puts expiring here on Friday with 190 covered calls. And looking good there too. I'm probably going to keep that right where it's at. So I guess the short answer is, guys, investing's a little different game. And Mon, I just saw what you wrote in, and I probably need to make I need to preference this in case anyone feels this way. Guys, it's not that you bug me. Please don't think I'm here trying to get mad at my clientele. I'm doing the best I can to show you how trading and investing is in real life. I need you to understand where I come from. And in all honesty, I'm trying to share some of the things I do well, some of the things I do wrong. So that way you'll have a great understanding of what it takes to do this. Any questions in regards to the what ifs and why things change overnight? And two of you jumped right in. That's why I like these Tuesday nights. Give some insight into what you do. Thank you, Maud. And Dave said, so trading is more sticking to the rules, whereas investing is not. Dave, no, where investing is trying to make as much money as you can over a long period of time. You know, more than just a week or a couple weeks. It's It's really trying to make enough money so that you retire with significantly more than you have with me. Alrighty. If there are any other questions, go ahead and type it in. But what's happening this week and why? Correct. It's a vacation week. It's vacation week. With Thursday, markets closed, and Friday, a half day. It's Thanksgiving, right? So we're going to go through pretty standard. Thursday to off, Friday's here. It's been low volume the last couple days. It'll be no volume tomorrow and really no volume on Friday for the half day. Our markets are news driven right now. So just to give you a heads up, I obviously think our markets are news driven by the what if we ... get tax reform, repatriation. What else do we have? FOMC rate hike. New Fed chair, right? How about this? No more Meg Whitman at Hewlett-Packard, and she's done really nothing but sell off pieces and focus on their strengths. I mean, I don't know if she's worth all the freaking millions of dollars she got paid. But we're news driven. We're basically out of the earnings season. So what will be the next news? What's the next news? What is the next news? Debt ceiling. That's an excellent one that I forgot. I don't think so. Okay, put a couple question marks in. What's the next news? Black Friday sales that come out Monday, right? Black Friday sales, if it's more, if it's less, if there's some stores that have higher traffic or less traffic. This will be the reason why I will most likely, depending on how Costco reacts, take a little bit of profit. Take half of our long positions off because we could run into Monday where it drops $5, $10 overnight. Alrighty, let's see. Where our markets end this week, I'm going to say higher. We're just going to follow the trend that's put in place right now. And as I look at the Dow, climbing higher, just broke to some all-time high. Well, almost got to some all-time highs. Didn't close over it, but we're moving higher on the Dow. New record on the S&P. And new record on the NASDAQ, almost in that oversold territory. I still think we're going to be up, plain and simple, 1.5% for November. And some people said, well, where do you look at this? The S&P 500 is basically where we're at. And we finished at 2580-ish range, or at 2599. That's almost 26 points. You know, we're basically looking at a 39-point upward movement for the month. That would put us at that 1.5%. It is kind of interesting, just as a heads up, December options expiration are on the 15th. It's like it's only 2 weeks into 2 weeks into the month of December, So I will most likely be adding some protection on to get us through January, which I'm a little worried about, into February. I'm looking at probably adding some end of the year protection on for either a sell-off that might come at the end of the year or a sell-off that we'll get at the beginning of next year based on the tax reform and the fact that people are not selling off this year, hoping for some sell-off next year, which means you'll see repositioning for mutual funds that may occur in January instead of the end of this year as well. With that said, you may see some profit taking here towards the end of December, so I'm just going to protect myself. I need to protect my gains for the year, and I can create some, put calendars or what have you if I need to. Not a whole lot for earnings is coming on, in all honesty. Today is the earnings day with Campbell's Soup, Dollar Tree, Kirkland, Lowe's, Hormel, GameStop, Guess, Hewlett-Packard. Tomorrow we do have Deere, which is kind of unusual. I think Deere is not really a blue chip, but it acts like a blue chip. And checking after hours, and after hours it's kind of there. So not a whole lot going on there. We have some semi-big economic reports, but again, with low volume, I'm not sure you're going to see reaction to it. Durable goods tomorrow, Michigan sentiment, initial continuing claims. Nothing really happening internationally, but we do have China industrial production over the weekend, which will most likely set our futures for Monday. As I'm going through, I found a couple articles I thought were interesting. How to find out what Facebook knows about you. Really interesting as it goes through, and I did this and found out, wow, Facebook knows a lot more about me than I thought it did. So I am a Facebooker. Just some information that might be helpful for you guys. I have an article here, the debt bond that keeps growing and now equals half our GDP. A very scary thought, especially when you look at the debt compared to the percent of GDP. Again, we're back in some of those nosebleed levels of 2000, of 2008. You do have the 80 crash here. That little blip there is going to be the, I thought there was one in 83. So when does corporate debt matter? It matters for growth. If you see too much corporate debt, they're paying more money out in debt and interest than you do in growth, in which case you'll see a slowdown or a recession in the economy. Let's see what else we have here. And I guess that's it. I thought I had 3. Oh, market clearly at a narrow top, says long time bull Jeremy Siegel. So it's just some interesting stuff that I was reading through that I thought you guys might want to hear. Any questions that I can answer for you? So am I an investor or a trader? In all honesty, David, I am obviously much more of an investor than a trader. So the short answer is I'd rather invest. Trading drives me crazy. So when does corporate debt matter? It always matters. It always matters. With that said, though, it's just a chart pattern, Maud. If you take a quick peek, look at the tops that you're seeing and matching on our chart pattern. There's 2008, there's 2000, and you do see one in the 80 range. It was really 83 that I was worried about. I'm asking, when does the market pay attention to it? Well, it started to in this article because it's matching some nosebleed levels that we were up against the last 2 times the market crashed. Does that mean that that you're going to see a crash? No. But it does mean the high-yielding bonds or the junk bonds, you're probably going to see a rotation out of them, and it triggers concerns that people start to sell off. So it's an interesting article. I like what he says. Everything is fine until it isn't. And that's where we've been in for 4.5 years, 5 years. We're so overdue for a correction, it's unbelievable. Where the correction, when it comes, will be fast and it'll probably be very hurtful as we trigger through stop losses and all that kind of stuff. I might even go so far as to say I think we might see the U.S. stock markets for the first time in history close for a day because there will be no buy orders and not enough money on the market maker side, that once some fuses are tripped, don't be surprised if we say, hey, the fuses won't go back on, we're going to close the U.S. markets for a day and open up tomorrow. It probably will be a bloodbath. Will I have puts on at that time? I hope so, Maud. But obviously, you can't predict the future. In 2008, I looked like a genius, only because I had a lot of puts in place that happened through an earnings at the beginning of the year. For the flash crash, I looked like a genius. It happened a week after the end of the earnings season. With that said, in 2000, I didn't have any protection on it and suffered through that. That's partially because I didn't learn about protection. But the short answer is I'd rather do a little overprotecting into the beginning of next year than a little underprotecting. And yes, I will do the best I can to look as genius as I can, Maud. David, timing. Yeah, okay, so David just asked, why am I worried about timing? And yes, it's impossible to time the market. No one has a crystal ball. But when you look at some patterns and what's happened, boy, again, a lot of this is looking like, hey, I'm going to suggest you read the article. Read the article and see how corporate debt takes place here. I know there's been a lot of cheap money, so it doesn't mean it can't go on higher. But look at the drops that you see. And those are pretty significant drops, down over 10%. So the last time we had to reset the corporate debt over 10%, our market dropped 46 at one time, finished down 38% in the year for 2008. Good, thank you. Are there any other questions? If they're not, guys, have a wonderful Thanksgiving. This will not be posted until tomorrow evening. And we're going to start to get some more people into these. You guys keep showing up. We enjoy you, but hopefully we'll get some more questions. Hey, happy Thanksgiving to you, Maud. Guys, have a wonderful evening, and I look forward to seeing you next week. Bye-bye.